Hello and welcome to another daily market update by Market Intel. My name is Ben and today we want to take a look at a stock we looked at only a few weeks ago, T-Mobile. And the reason why we're doing it is because this chart is currently entering a trading area. It's the trading area we were talking about back then. Now entered it, so we want to take a look at what are the parameters here and where would we expect a trend reversal back to the upside. Let's go. Okay, we are now here on our website, dailymarketupdate.com. You can find the link in the video description. It takes you to this website. You can register. It's completely for free and you get access not only to stocks updates, but also tech stocks, cryptocurrencies, and the S&P 500. By the way, if you're interested, you can also check out our new Instagram channel, The Market Intel. You can find the link in the description as well. Now let us take a look at the stocks section here and we take a look at T-Mobile US and we want to take a look at the 2-day time frame. This is really where we see this trading area, but then we will also take a look at the 4-hour time frame to get a better understanding of where in detail we can expect a reversal. Now looking at the larger time frame, bigger picture, the price, as you can see here, we've nearly entered the target area. We'll take a look at the smaller time frame for a little bit more precision. But you see here the current idea is on this chart that we are in an uptrend, still an uptrend that hasn't changed, and we expect this uptrend to continue with a probability of 63%. Okay, so you see here we're printing higher highs, higher lows, and the current idea is that we are moving up here in a 5-wave pattern in wave 5, beige wave 1, beige wave 5 of blue wave 1, and we're currently in the internal corrective pullback, a 4th wave pullback of that 5th wave to the upside. So this is a 5-wave move to the upside, and the support area or trading area or trend reversal area is defined here between $204 and $221. That's a standard trading area or support area for a wave 4 pullback. Normally we don't want the price to break below the 50% retracement in a 4th wave. It would break the impulse. It's not a formal invalidation point, but it's more about statistics. So if we take 100 wave 4s, we know that they would normally, most of them, find a low in this support area. So it's not automatically guaranteed that this will happen, and technically nothing is broken if it happens, but probabilities then for an alternative scenario will increase, and it will then become more probable that actually, okay, blue wave 1 already formed the top early 2025, whereas in our preferred interpretation, again with a probability of 63%, we would expect a reversal here in this region, and we've nearly entered that area, we're nearly there, then a 5th wave up should follow and take the price potentially to $300 plus. This would be ideal. This is currently our preferred interpretation. So this is likely like a pivot that allows us to distinguish between bullish momentum and bearish momentum, which could then lead to a test of maybe even $142 or lower. So very important to be aware of these parameters. Now let us also take a look at the shorter time frame. Here you can actually see it in a little bit more detail, and here on the smaller time frame we can see a little better that we've actually entered that area. Important here to understand that looking at the microstructures, it becomes clear that most likely we should go a little bit lower. There is at the moment at least no evidence that a low has formed, but it seems quite probable that exactly in this area a low should form. This is likely a WXY complex correction, and we've just reached the 38.2 retrace level here, and that 38.2 retrace level is normally an ideal target for a wave 4. We've got that box, but in my experience, if we're looking at the 50% retracement and the 38.2 retracement, normally around the 38.2 retracement, you would see more frequent reactions. But we'll see. We'll see. This is something that needs to be observed over the next few days. Going up from here could send the price, first of all, to that March swing high, and then could lead to a breakout. And eventually, we should then see the market break above that $295 level and potentially even higher. So again, we've arrived at a key spot. Please note that also here this early 2025 swing low in around the $210 mark could act as additional structural support. So maybe, and that's speculative at this point, the price goes a little lower because we have no evidence for a low yet, even though we've reached that area, tests that level and might then develop an upside impulse. So it's definitely something to watch, more important than ever to watch this chart. But please note that below $204, this structure is likely starting to break. So that's the update on T-Mobile. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in additional updates, make sure to check out our website, dailymarketupdate.com. Also, as I said, check out our Instagram channel. It's new, packed with new information. It's called The Market Intel. You'll find the link in the description. Thanks so much. Bye-bye.